Hey everybody, this is Roberta Eastman from homebuyersinventory.com, and today we're back. We're going to be answering another question that we get a lot. You know, at the end of our process and the term that you have with us, you're going to be going and talking to the banks probably 6 to 9 months, maybe sometimes even a year prior to the end of your lease option purchase term. And they're going to be talking about the process for them, the mortgage process. And there are some terms in there, some words that we wanted to share with you so that you would know what they're talking about and you'd have a much better understanding, which then of course allows you to make a much better informed decision on whether or not they would be the right mortgage company for you. So today on homebuyersinventory.com, we are going to be answering the question or learning about escrow and its relation to the mortgage process, and you're going to have a much better understanding. So let's go ahead and get started. So as I shared, during the rent-to-own process at Home Buyers Inventory and toward the end of the term to lease option your home with us, you're going to be encountering some mortgage terms, and as a newbie in the field, or even if you've been in it a while, you might have forgotten what the terms meant. We're going to be looking at and asking yourself, what is the meaning of this term and how does it work? So in this article, we're going to be encountering new words and we'll discuss them further. The main topic will be, what's an escrow and how will it affect your mortgage? So your question is, what is the escrow and will it affect my mortgage? So when we as borrowers take out a mortgage, lenders often require us to pay into an escrow account, also known as an impound account. The lenders control this particular escrow account, and they use it to pay our property taxes, homeowners insurance on the borrower's behalf. So each month when you're making that mortgage payment to the bank after you're done with your term to rent to own with us here at Home Buyers Inventory, you pay down your principal and your interest while contributing to the escrow account. So typically a bank will include more money, that is your taxes and home insurance, every month, and they put it into this escrow account for you. Now sometimes banks, if you place a down payment of 20% or more, the lender may choose to waive the escrow account. Now if they do that, you can choose, and you will absolutely want to make sure that you are paying your taxes and insurance yourself. Your lender may also offer a lower interest rate if you choose to establish an escrow account. So there are pros and cons, as you can see already. And then there are other lenders who require you to pay into an escrow account that may or may not affect your interest rate. So some lenders have it lower the interest rate, some don't, whether they have you do an escrow account or not. If you don't have an escrow account with the bank, you need to make sure you're paying your taxes and insurance on time. If you do have an account with the bank, then they pay that for you out of that escrow account. Now, if the lender does require you to have an escrow account, they must follow the Department of Housing and Urban Development rules on maintaining those. So if they're going to be the administrator, there are Department of HUD rules that require them to maintain the escrow accounts in a specific way. And an escrow may not affect your interest rate and will not change the type of mortgage. So if I'm going to get an FHA loan with 3.5% down, they may not waive the escrow. They might make you have it, but your interest rate may or may not be affected. So it's a little bit of a willy-nilly in regards to what bank you use and whether or not they make you do an escrow account or not, whether or not they help you with your interest rate decreasing or not. That's why it's always a good idea to shop around and go to a mortgage broker. That mortgage broker then sends out the information to all of the banks that they're working with, and hopefully they come back with the best rate. And because tax and insurance rates are variable, again, insurance rates are something you want to shop around for. Taxes are property taxes. That's driven by the city. We don't have an option there. But your insurance rates are variable. So it's very possible the amount you pay into escrow can change from month to month or year to year, even if you have a fixed rate mortgage. Because if your insurance goes up, then the bank is going to want you to put more money into escrow. If you have a shortage at the end of the year, they will send you a document telling you that, and then you kind of have to make that up. Or if you have an overage, then they'll mail you a check, or they'll just have you keep it in there and it will go to next year. And then there's something new, or it's not new, it's been around forever. The rules have changed on it though, and this is if you're unable to make a down payment of at least 20%, the lenders can add what they call private mortgage insurance to your escrow payments. You really do want to try to avoid PMI, private mortgage insurance, if you can. It's also known as mortgage private insurance or mortgage insurance private. It's just, remember the PMI part for private mortgage insurance. This private mortgage insurance that the banks add on if you don't have a 20% or a conventional loan, it can add on $150 to $300 a month to your mortgage payment. So even though you don't have as much money down on the front, they're having you do this private mortgage insurance, which isn't protecting you, by the way. It's protecting the bank if they ever have to take the home back. You can either do a low down payment and do PMI, which is $150 to $300 a month, which is a lot, or you can do a higher down payment and avoid this PMI by doing a conventional loan. Most FHA loans have this PMI insurance added on, and you used to be able to cancel your PMI insurance. However, that's no longer the case if you have an FHA loan, which is the type of loan that have a lower than 20% down payment, or it could be the type of loan that's not called a conventional loan. Luckily here at Home Buyers Inventory, when you execute your option to purchase your home, the down payment you put down at the beginning of your term goes toward your purchase price. Or it's actually a lease option fee that you put down, not really a down payment. It's called a lease option fee, and that is what you put down when you sign your paperwork, and that goes towards your purchase price if you execute your option. Now, if you don't execute your option, that becomes non-refundable. So you want to make sure that we're doing the work that gets you to the bank so that you can execute your option and get into the homes. Now, the banks love this. It will be a part of your percent of your down payment that the bank requires, no matter what loan type you choose with the bank. Another thing we wanted to talk about is your location also affects your monthly escrow payments. This is in an area prone to flooding or fires, for example. Your insurance payments might be higher, and therefore your escrow will increase as a result. Here at Home Buyers Inventory, we're hands-on in helping people to get their dream home all throughout the process, from the start of the process up to giving you your keys to your home. So to learn more about us, visit our website at www.homebuyersinventory.com or our Facebook page with Home Buyers Inventory. Our Twitter page is at HomeBuyersINV, so at HomeBuyersINV. We are now on different platforms that can suit your needs, anywhere you like. May it be on YouTube, Google Play, iTunes, Stitcher, TuneIn, SlideShare. And get a free home security tip. For more questions, please visit us at Twitter at HomeBuyersInv, which is at HomeBuyersINV, or on Facebook at Home Buyers Inventory.